If I had just $1,000 to invest in crypto right now, where would I put it? That's the question so many people are asking, and honestly, it's a great one. Because $1,000 isn't life-changing by itself, but if you use it strategically, it can become life-changing. In this video, I'm going to break down exactly how I'd invest $1,000 in crypto today, step by step, based on logic, proven fundamentals, and a long-term approach. No hype, no quick-flip coins, and definitely no guessing games. Just what actually works for regular people who want to build real wealth over time. And stick around till the end, because I'll also share the 3 biggest mistakes beginners make when investing small amounts in crypto, and how to avoid them completely. Before talking about where to put the money, we need to talk about the mindset behind investing. Because crypto isn't just about buying coins, it's about understanding what you're doing and why. The truth is, most beginners lose money not because of bad luck, but because of bad habits. They chase hype coins, get caught up in social media trends, and then panic sell when prices drop. But that's not how real investors think. The right mindset is to build for the long term, to think like someone planting a tree, not lighting a firecracker. Before investing a single dollar, I always ask myself 3 simple questions. Do I understand what I'm investing in? Am I comfortable holding this for 3 to 5 years? And does this project have real-world use or adoption potential? If the answer to any of those is no, then I skip it. Because in crypto, education is the most powerful investment you'll ever make. Now, let's talk strategy. If I had $1,000 to invest, I'd start with the foundation of every smart crypto portfolio, Bitcoin. I'd put around 40%, so about $400, into Bitcoin. Why? Because Bitcoin isn't just another digital asset. It's the foundation of the entire crypto ecosystem. It's digital gold, the most secure, decentralized, and widely accepted cryptocurrency on Earth. Bitcoin has proven itself for over a decade, surviving every crash and coming back stronger. It's not about massive short-term gains. It's about stability and long-term wealth protection. When everything else crashes, Bitcoin is often what holds its value best. It's the ultimate wealth insurance in the crypto world, the anchor that keeps your portfolio steady during volatility. Next, I'd move 30%, about $300, into Ethereum. If Bitcoin is the foundation, Ethereum is the engine. It powers most of what we actually use in crypto today. DeFi apps, NFTs, decentralized organizations, stablecoins, and even gaming platforms. Ethereum isn't just a coin. It's an entire ecosystem of innovation. It's what allows developers to build the next generation of financial and digital tools. And now that Ethereum has moved to proof of stake and continues to scale with new upgrades, it's stronger and more efficient than ever. While Bitcoin is the store of value, Ethereum is where the technology and creativity live. That's why it earns such a large portion of my portfolio. It's a long-term bet on the future of blockchain itself. With 70% of the portfolio now solid and relatively stable, I'd allocate the next 20%, about $200, to high-potential altcoins. This is the fun part, but also the part where people often go wrong. Altcoins are where you take slightly higher risks for potentially higher rewards, but you must be smart about it. I'd split that $200 between 2 or 3 strong projects. For example, Solana for its incredible transaction speed and growing developer ecosystem. Chainlink, because it's the backbone of decentralized oracles that connect real-world data to smart contracts. And maybe a Layer 2 project like Polygon or Arbitrum, both designed to make Ethereum faster and cheaper. These aren't meme coins or speculative gambles. These are infrastructure projects that benefit as the entire industry grows. When adoption rises, These networks grow in demand. Now, the final 10%, around $100, would stay in a stablecoin like USDC or DAI. And this is where most beginners make a mistake. They go all in and leave nothing for flexibility. Having a bit of cash on hand is what gives you power in this market. Crypto is volatile. There are always dips, flash crashes, and unexpected opportunities. Keeping a small reserve lets you buy when others are panicking. It's like having dry powder ready for when the fire sale begins. Smart investors don't predict the market. They prepare for it. Once the allocations are set, the next step is how to actually buy and store your crypto. If you're new, stick to reputable exchanges like Coinbase, Kraken, or Binance. Always enable two-factor authentication and never share your private information. After buying, don't just leave your crypto sitting on the exchange. Move it to a self-custody wallet like MetaMask or a hardware wallet such as Ledger or Trezor. Remember the golden rule of crypto: not your keys, not your coins. If an exchange gets hacked or goes down, you want full control of your assets. Now here's the truth nobody tells you. The goal isn't to turn $1,000 into $100,000 overnight. The goal is to build consistency. If you can invest $100 or $200 more each month, use a strategy called dollar cost averaging, buying a small, fixed amount regularly, no matter what the market's doing. That way, you automatically buy dips and smooth out your cost over time. It's one of the simplest and most powerful ways to grow wealth without emotional decisions. Combine discipline, patience, and solid assets, and your portfolio will grow. Not by luck, but by logic. Let's also talk about the 3 biggest mistakes beginners make, so you can avoid them. Mistake number 1: chasing hype coins. If it's trending on social media, you're probably already late. By the time you hear about it, early investors are preparing to sell. Focus on fundamentals instead of FOMO. Mistake number 2: ignoring security. Use strong passwords, enable two-factor authentication, and keep your recovery phrases offline. Treat your crypto like real money, because it is. And mistake number 3: overtrading. Constantly trying to time the market usually ends with emotional losses. The smartest investors buy quality assets and let time do the heavy lifting. So, if I were starting today with $1,000, that's exactly how I'd invest it. 40% Bitcoin, 30% Ethereum, 20% in strong altcoins, and 10% in stablecoins for flexibility. This portfolio gives you stability, growth potential, and liquidity. Everything you need to succeed in both bull and bear markets. It's not about gambling. It's about creating a system that works quietly in the background while you live your life. If you found this strategy helpful, drop a like, subscribe for more crypto breakdowns, and tell me in the comments, how would you invest your $1,000 in crypto? Because one smart move today could set you up for the next big wave tomorrow.